Hi everybody, we got earlier today latest data out of China for the fully electric vehicle market. So throughout this presentation, all the numbers I will be presenting pertain exclusively to the battery electric vehicle segment of the auto market in China. So let's get right in. So what you see in front of you is for the last almost 2 years on a monthly basis, total battery electric vehicle sales in China. In the latest months that was published today, for August, total sales came in at 612,000 vehicles. That's up 13% year over year. On this next chart, you see total battery electric vehicle sales revenue. In August, total sales came in at 13.1 billion, and that's also up 13% year over year. So after the first 8 months of the year to date, total revenue with electric vehicles was 87 billion, and that's up 19.2% year over year. And next, we look at the number of different battery electric vehicles available on the market new. And in August, that number was 209 vehicles. So the Chinese consumer could choose from a truly dizzying selection of different vehicles. And fully electric vehicles account for approximately 1/3 of total available different new vehicles. In August, the total number across all types of vehicles, not only electric vehicles, but also plug-in hybrid electric vehicles, extended range electric vehicles, or internal combustion engine vehicles, the total number was 650 vehicles. The key point here is that is up 12% year over year. So coincidentally, the model growth is in line with volume growth. But the key observation here is that total number of vehicles came down quite substantially from the June all-time high at 232 vehicles. So manufacturers clearly have done at least a bit of portfolio pruning. But by standards of all other global automotive markets, the Chinese market is significantly oversupplied in terms of vehicle variety. But we dive into that point a little later. Next, we look at average selling prices, and here we actually saw a quite meaningful month-over-month increase to $21,300 on average. And that implies, compared to August last year, a reduction of only 1%. So that is a quite favorable development. As you can see, after a number of months that saw a double-digit or almost double-digit year-on-year decreases. Especially when you look down here at the year to date, the average electric vehicle was sold for $21,000, and that is down 8.2% year over year. Next, we look at the top electric vehicle sellers in China, and the metric you're looking at is a trailing 3 months metric on a monthly rolling basis. That means each data point at each month refers to the total over the last 3 months to that month. So when we start at the top, BYD is the #1 volume seller. In August, in the 3 months to August, that means June, July plus August, in total, BYD sold 432,000 fully electric vehicles. The #2 is Geely. Geely came in at 267,000, but you can see there's quite a significant gap between BYD and Geely. Then third comes in the SAIC General Motors joint venture at 178,000 vehicles. And then #4 is Tesla at 159,000 vehicles. Then after the top 4, there's a quite substantial gap, and then we go to XPeng. XPeng is at 97,000 vehicles, and the one that stands out is Xiaomi. That so you have to keep in mind, Xiaomi only started selling electric vehicles here in April 2024, and has already outpaced all these other more established sellers like GAC, even outpaced NIO, FAW, Leapmotor, Chang'an, Chery, and BAIC. So very impressive performance, but we'll discuss Xiaomi in more depth in a bit. But as I pointed out last time, vehicle unit sales is a rather poor metric to assess the competitiveness of the various players. So let's move on. Now we look at revenue generated over the last 3 months with fully electric vehicles, and this provides a much better picture. BYD is still the #1, generated 8.1 billion with fully electric vehicle sales. Now Tesla moved up in this ranking from 4 to 2, generating 6.2 billion. That shows you the significant difference in product portfolio. Just on pure unit sales, Tesla is #4. But once you look at revenues, because Tesla sells on average much higher value vehicles than BYD or Geely, you get a much clearer picture of who is actually taking home the money in the market. The other interesting point is that the newcomer Xiaomi already is at number 4 on that basis, because Xiaomi sells exclusively also higher value vehicles, and therefore it's relatively smaller volume compared to the top players, thus completely hide the competitive strengths of Xiaomi's products. And for that reason, yet again, volume is a very bad metric. Geely is number 3 at 4.5 billion, and then XPeng 5 at 2.4 billion, NIO 2.3 billion. The SAIC General Motors joint venture, significant gap at 1.6 billion, and then GAC 8 at just under 1.3 billion. And then we drop quickly under 1 billion. And then there's a bunch of companies that generate significantly less than 1 billion over a trailing 3 months period. Next, we look at revenue market share. So the revenue generated with electric vehicles divided by total electric vehicle revenue generated in the market. BYD took 22% of the total market, Tesla 16.8%, Geely 12.2%. But you can see Geely is losing significant dollar market share. And dollar market share is really the relevant metric. It's not volume market share, because the economics are significantly more tied to dollar value rather than unit count. There are countless examples from different industry. Apple in the smartphone world is a perfect example. Apple is not dominating the smartphone world in terms of unit sales, but is dominating every other smartphone seller in terms of revenue generated with smartphones. Because the average Apple phone is, call it around about $1,000, while next competitors sell phones for less than half that on average. So when we look at this chart, we can see some significant developments in the market. Of course, Tesla has been losing market share for quite some time, but this is driven by significant increases in available products, and we look at this in more detail in a second. Also, a lot of actors used dumping pricing. That means they sold products at or below cost. And I recently provided a study on the topic. For example, BYD, it turned out, has still never generated a positive free cash flow. i.e. BYD remains lifetime cash flow negative if you adjust for DPO, days payable outstanding. I estimate if BYD had the same DPO as Tesla, they would have to raise approximately $20 billion in capital. But this video is not about that, so let's see what else we can learn from this chart. We already talked about Geely's quite significant loss in market share. Xiaomi, on the other hand, has had a quite rapid rise, has been kind of flat for a couple of months. I think the drivers are the following. When Xiaomi launched, they only launched a sedan product that was very similar to the Model 3. That was highly successful, and as that vehicle's production ramped, at some point they were fully ramped. Plus, that vehicle kind of reached its demand ceiling in the Chinese market. In addition to that, Xiaomi unveiled a SUV product, their first SUV product, the second product, and it's likely that a number of Xiaomi customers are waiting for that product. And I expect in the next couple of months, this curve that you see right here, that's right now a little flattish, this market share curve to significantly increase. And my firm expectation is that Xiaomi will most likely replace Geely as the number 3 in terms of electric vehicle revenue market share within the next couple of months. The primary reason why I'm so bullish on Xiaomi's market share is I tested a new product, the U7, and it's all around a very good product. And what they managed to do, to my surprise, to be honest, they gave it a sporty coupe-like styling that sets it apart from an otherwise SUV segment that looks pretty much all the same. But they managed to not compromise the cabin space. And on top of that, great specs, very competitive pricing, a lot of other features, and of course Xiaomi software, which has some features that not even Tesla has. And the one I have mentioned many times is a seamless phone mirroring function. So what else can we see? XPeng lost a little bit of market share after a rapid rise. XPeng's rapid rise was driven by launching lower cost vehicles. NIO, as you can see, has had several ups and downs. Here was a period of market share loss, stagnation, gain of market share loss, market share gain, market share loss again, then some period of stagnation, recently some market share gain, and then some loss again. I expect NIO to gain some market share in the near future on the launch of several new products. Then SAIC, General Motors, a joint venture, has had also some ups and downs, but has seen a sustained market share loss over some time now. And then also GAC also has seen a quite long-term downward trend. All the other players are really not that important. As you can see, their market share gets quite small. The largest of them is FAW. This is, for example, a big Volkswagen partner in China, 2.5% market share, and the others are still relatively small in electric vehicles. Li Motor and Li Auto, they are mostly hybrid electric vehicles maker, and which partially explains why they are still relatively small in full electric vehicles. But my expectation is they will be pushing now increasingly into full electric vehicles, since the overall Chinese market is moving increasingly to fully electric vehicles. Next, we need to talk about the number of vehicles each maker launches into the market. And again, this is only fully electric vehicles. The top volume sellers, BYD, unsurprisingly also have the largest number of vehicles. So BYD at the moment has the most, at 30 different new vehicles in August. And I'd like to point out this is based on registration data. So at least as far as we can tell, that these are real sales, except for the problem that there was apparently earlier in the year some practice where automakers registered vehicles and then sold used vehicles with 0 miles, but that topic goes beyond the scope of this video. And then we look at Geely 28 different models, SAIC, GM, 18 different models. And one additional thing I should point out with regard to this analysis, this reflects only domestically produced vehicles, and they account for 99.5% of fully electric vehicles in China. So this is really the market. And this is also why you see Tesla only 2 models, because this is Tesla's domestically produced Model 3 and Model Y. Tesla does not produce Model S, X, or Cybertruck in China, and therefore the S and X is not counted towards Tesla's model lineup. The revenue numbers and so on also did not include S and X sales, so the numbers you're looking at are fully consistent. Just something to point out, but the key point is that when you look at these major brands and their ranking, and the revenue they generate, there's a very, very clear distinction between BYD and Geely and Xiaomi and Tesla. If we go back real quick to the total revenue they generate, BYD number 1, Tesla number 2, Geely 3, Xiaomi number 4. And if we now go back to the models, BYD, Geely, huge number of models, both Xiaomi and Tesla, only 2 models, and Xiaomi's second model just recently started ramping. And for that reason, I'm so bullish about Xiaomi's likely performance in the next couple of months. Once they started ramping the SUV, they will become, I'm quite certain, the number 3 largest revenue generator with electric vehicles in China. Whether they can dethrone the Model Y, I think that is a much higher hurdle, and that one I'm not too sure. But to really bring home the point how the Model Y stands out, or Tesla's products, that also includes the Model 3, stand out, and also by Xiaomi stand out, we need to look at the revenue generated by model. So not only by vehicle maker, but by model. And you can see Tesla generated with the Model Y 4.6 billion over the last 3 months in China. This makes it a very clear number 1, since the second highest revenue generating vehicle is the Xiaomi SU7 generating 2.3 billion. Number 3 is the Tesla Model 3, generating 1.6 billion. And then there's the Geely Starwish at 1.4 billion. That vehicle is very different from the Model Y, the SU7 and the Model 3. These top 3 vehicles, they sell all at comparable selling prices, while the Starwish, it's a tiny vehicle, it sells for less than 1/3 of the other 3 vehicles' average selling price. So this is a very different type of vehicle, and the reason why it shows up here, because it sells at very high volumes. Occasionally, it even meaningfully outsells the Model Y. And in August, on a monthly basis, the Starwish was the most sold vehicle in China. But again, economically, volume not that important. You can see in this ranking, it only generated the fourth highest revenue despite being the clear number one in volume. And then importantly, here the Xiaomi U7, that is the new SUV product I mentioned, which I believe will become the number two, and the rationale is quite straightforward. The Xiaomi SU7 is the number two. It's a sedan that is comparable to the Model 3. The sedan segment is significantly less popular than the SUV segment. The U7 is an SUV, was targeted at its largest segment of the auto market. So given that the sedan product is already so successful, I think it's quite obvious that the U7 will likely at least exceed the SU7. That would make it the number two most revenue generating product. And whether it can close the gap to the Model Y remains to be seen. I think it has a decent shot. Personally, I think it depends on whether Tesla can launch what I call a nap feature. If Tesla can launch FSD version in China that allows the driver to take a nap while the vehicle is in motion, I think this would create enough of a demand effect that the Model Y could retain the number one position. That's factor number one. Number two, the new Model Y launched in January was not a new vehicle. It was, by automotive standards, a mild refresh. And that suggests that if Tesla launches likely in the next 2 to 3 years a new Model Y that comes with latest battery tech, etc., AI 5 at that point, or I should say AI 6 likely at that point. That is the inferencing hardware used in every Tesla vehicle. Currently we are on AI 4. I think this could give it enough of a push to basically fend off the SU7. If that doesn't happen, it's likely that sometime next year the U7 might become number one, at least temporarily. Now we get to the last slide in this presentation. This shows you the revenue market share by model, and very impressively, Tesla Model Y takes 12.4% of the revenue generated with electric vehicles in China. I think this is incredibly impressive. I study the Chinese auto market intensively. I know how incredibly competitive this market is. For Tesla to take 12.4% market share is really outstanding. Also interestingly, when you look at the Xiaomi products, the SU7, as the SU7 is losing market share, the U7 is gaining market share, and this is basically exactly what I predicted a couple of months ago. There will be significant cannibalization going on. Currently, the fully electric market sees strong tailwind, but the Xiaomi SU7 product cannot benefit from that. And I think the main driver is that a lot of Xiaomi customers just wait for the U7 to become available. And I think this is confirmed by this market share trend. The Model 3 performed quite well recently, but then saw kind of a bit of a drop off. I think this is also partially related to the new Model Y launch. But I think the stabilization that we see now comes, or are the early signs from the impact of the Model 3 Plus launch. And then we have, again, the Geely Starwish at 3.9% market share, and then the Xiaomi U7 already at 2.6% market share, only a few months after it was launched. And keep in mind, this vehicle is still ramping, is highly supply constrained, and latest data implies the vehicle might be sold out into the second quarter of next year. And then you can see after these top contenders, market shares quickly become quite small. And you can see that, for example, there is in the top 5, there is no BYD product anymore. The first BYD product comes in at number 7. It's a Seagull. It's also a more affordable vehicle compared to the top contenders, except for the Starwish again. Same for the Dolphin. The Yuan Up, also more affordable. And is part of BYD's problem. They are by far, in terms of volume, the market leader. They're also the market leader in terms of total revenue generation, but this comes at the huge expense of requiring a very large product portfolio, since BYD has not been able to make a killer product that can rival the likes of Model Y or SU7. So that's the end of this month's China electric vehicle market update. I hope this was insightful. Thank you very much for listening. See you in the next one. Bye.